Friends, once someone asked Warren Buffett, "Your investment strategies are so simple, yet people fail to copy them and become rich like you. Why is that?" To this, Warren Buffett replied, "Nobody wants to get rich slowly." Friends, investing is something that takes a long time to build wealth. Even professional investors like Warren Buffett and Charlie Munger earned their first $1 billion only after the age of 50. Most investors you see become wealthy only in their 50s or 60s. Because of this, most beginners in the stock market tend to move towards trading. But is trading really better than investing? In this video, I will explain in detail the difference between investing and trading and which one is better for you. Both investing and trading can make you a lot of money in the stock market, but they differ significantly in terms of knowledge, strategy, time, and goals. Let's discuss each of them one by one. Let's start the video by understanding what investing and trading really are, and how they are different. In investing, money is put into stocks or funds for the long term, like 10, 20, or more years. Over such a long period, good businesses or the overall market have a high chance of growth. Look at this Nasdaq 100 chart. You'll see that over long-term periods like 5 or 10 years, Nasdaq 100 has never given negative returns, no matter how many crashes happened in between. Similarly, if you check the Sensex chart, it has also never shown negative returns in the long term. If you look at long-term charts of good stocks or funds, you'll see similar trends. Investment is a highly analytical and calculated process that, through the power of compounding, can make you rich with high confidence in the long term. But friends, when you invest, you have to give your money time to grow. You need to control spending in your youth and instead save and invest money. You must also avoid spending on materialistic things like bikes, expensive clothes, or cars so that you can invest that money. On the other hand, trading involves short-term investments. If you follow the right principles, you could become rich in just 2 to 3 years through trading. Trading is a very old concept, dating back to ancient times. In simple terms, buying something at a low price and selling it at a high price is called trading. The same principle applies to the stock market: buy low, sell high. In trading, money is invested only for a very short time, maybe a week, an hour, or even just 5 minutes. Here, the focus is on the price of the stock and market news, not the fundamentals of the company. Trading involves a lot of prediction and thus a lot of risk. Even if a stock is fundamentally strong, it's almost impossible to analyze its short-term performance accurately. No matter how expert a person is in the stock market, they can only guess what the market will do. That's why trading is risky, and most people don't recommend it. Let's now talk about risk and reward in trading versus investing. When you invest, you get an average annual return of around 12%. But with trading, you might get monthly returns of over 12%, which means annual returns of around 144%. But as we've mentioned many times, in the stock market, reward always comes with risk. If you want higher rewards, you have to take higher risks. Today, more than 97% of traders in America lose their money. In contrast, over 90% of long-term investors earn good returns on their investments. Their money often doubles or grows tenfold. Investing carries much lower risk than trading. In terms of rewards, investing also gives you benefits like dividends and the power of compounding, which trading doesn't offer. Investing can become a passive income source where your money grows over time, even without active effort. In contrast, trading requires your daily involvement. You need to read market news every day and be active from market opening to market close, constantly watching charts. To earn money from trading, you need to be highly disciplined and consistent. Overall, with investing, you can earn good money in the long run with less effort and risk. With trading, you'll need to put in more effort, take more risk, and dedicate more time. So now let's talk about the kind of knowledge you need for trading and investing. For investing, you need knowledge of fundamental analysis. You must study all details about the company, its fundamentals, annual reports, information about its owners, basically, every aspect of the business. You need to analyze whether the company has growth potential in the future. Even finding just one good company to invest in can give you 10x returns in the long term. On the other hand, in trading, you only care about price. To become a professional and successful trader, you need to master technical analysis. You must control your emotions and greed and stay regularly updated with market and world news. You also need to become an expert in reading candlestick charts and understanding different candle patterns, and make decisions quickly based on them. Now, let's talk about whether trading or investing is better for you. It depends entirely on your goals, your risk tolerance, your discipline, and how much time you can give to the stock market. Usually, long-term investing is done to achieve future goals or retirement planning. For example, if someone wants to buy a house 10 years from now, it would be very hard to do so using only salary and bank savings. Even after saving for 10 years, they might still need a home loan. But through investing, you can build much more wealth in those 10 years and potentially fulfill your dream of buying a house. On the other hand, trading is about earning money actively. Here, you work for the money doesn't work for you. Trading is only good for you if you are highly disciplined, focused, and ready to take the stock market as a full-time career. A successful trader can easily earn lakhs of rupees, but reaching that stage requires a lot of effort. Otherwise, you may end up among the 90% of traders who fail. Friends, let me share something surprising about Americans and wealth. In the US, nearly 61% of adults live paycheck to paycheck. And yet, the same country has over 22 million millionaires. What's the difference? The secret isn't luck. It's mindset. Most millionaires in the US didn't win the lottery, they built wealth slowly, through consistent investing, not quick trades. According to Fidelity, over 80% of millionaires in America invested for the long term in retirement accounts like 401(k)s and IRAs. They didn't chase the market daily, they gave time for compounding to work. So if you're in the US and thinking, can I build wealth in this system? The answer is yes, but only if you choose the patient path. Remember, in both India and America, the principles of wealth are the same: discipline, patience, and long-term vision always beat quick wins. So friends, I hope you learned a lot from this video about investing and trading, and now you can decide for yourself which one is better for you. Let us know your thoughts about trading and investing in the comments. If you liked the video, give it a like and share it with your friends. And finally, don't forget to subscribe to our channel.